Why is everyone suddenly bearish about Bitcoin? This is an opinion piece over on CoinDesk, and the title is basically, the cryptocurrency has dipped following the most bullish event in recent crypto history, the launch of the spot Bitcoin ETFs, apparently causing a crisis in faith. Now, you guys, if you follow me on Twitter, may be aware that my opinion of this was already that nothing contradicts the current halving cycle and the Bitcoin price. And that is just the way I see it. Nothing can sway that typical pattern yet. We've been trying to see if maybe the influence of ordinals would bring parity between, of course, the base block reward and fees, which is where I think we'll see a breakout from the traditional halving cycle. But that's still way too far off for it to be consistent enough to level out the price of Bitcoin and keep it a little bit more stable. Let's go ahead and see what they say it is, because, you know, the way these people think is not, you know, as straightforward as we might think all the time. But let's go ahead and see. By nearly all metrics, spot Bitcoin ETFs have been off to a great start, and yet the launch of these much anticipated products is tanking the price of the industry's leading asset. Since January 10th, the day the U.S. Securities and Exchange Commission approved the roster of exchange traded funds, Bitcoin is down about 15%. What was widely regarded to be the most bullish event in recent crypto history, with the possibility of drawing in millions of new Bitcoin investors and potentially billions in capital, may actually, at least temporarily, be cooling Bitcoin's jets. This is largely due to the billions of dollars exiting GBTC, which transitioned to an ETF from a closed-ended trust, meaning investors are finally able to pull their capital out. Grayscale has seen more than $3 billion in redemptions, only some of which is flowing into other Bitcoin ETFs that charge much lower fees than GBTC's 1.5%. On social media, noted VC Chris Brunsky, I think that's the way, or Bernesky, there we go, said Bitcoin has yet to bottom out, giving a price prediction as low as $20,000 in an echo of recent Deutsche Bank survey that found 1 in 3 respondents saying the largest cryptocurrency could dip below 20,000 by year's end. Now, do I think it's going to dip below 20,000? No, we still know the cost to mint because we're miners and we're not stupid. The economics of Bitcoin will not allow it to really go quite that low, in my humble opinion. We're still looking at that $28,000 level on average for cost to mint. And at some point, you know, the miners have stabilized. And so when you see a dip below cost to mint is when miners aren't stabilized, meaning they get wiped out and they start going bankrupt, and then they sell off their Bitcoin to cover, while in the past bear market dip, they're over leveraged loans on their mining equipment because the price of the mining equipment dumped, right? And so if we're looking at that, most miners have reconsolidated, right? And starting to rebuild. And we've seen this across the board. And so most people that are mining now, most miners are in a position where their equipment is now covered, paid off, and they're prepping up and building up before the next halving. This means most of them are going on cash basis and have better numbers than they have in the past. So I don't see a sell pressure from the mining perspective that is going to push miners to sell at a loss like we've seen in the past. And I think we'll have to wait for that to work out. Now, it could dip a little bit below based on, you know, if there's large controllers of the Bitcoin that are already in current circulation. but I don't see it as being as big of a deal, especially if we compound that fact with the way that the ETFs function, being primarily paper Bitcoin. You know, the actual value of Bitcoin is still going to be based on power. As always, power runs everything. Energy is everything in this game. And with the rise in energy costs, it's just not viable. You would end up taking the entire network if you have an average selling price below the the average cost to mint. So I don't think 20,000. Personally, I do think we could drop below 30,000, but as we've seen, the price has already recovered back over 40,000. So let me know what you guys think in the comment section below and the live chat. Do you really think that the power is going out of the hands of the miners over the influence of price of Bitcoin, or do you think miners still heavily influence that price? I tend to think miners still heavily influence that price. Just 15% of Deutsche's, I think I'm saying that right, 2,000 survey takers across the US, UK, and EU said they expect Bitcoin's price to stabilize between 40,000 and 75,000 by year end. Now, as you guys are aware, what my prediction was is we would end up somewhere between 45,000 and 50,000 by April, which will be the halving time of Bitcoin. And then we'll start to see a slight increase, seeing the bull market start to pop off in December of this year, and hopefully that plays out. At least historically, this is how the halving cycle has influenced the price of Bitcoin and where we head to in the future. So that's what I'm planning around. It's not financial advice, just telling you guys how I'm taking a look at everything here. Is this negative sentiment around Bitcoin warranted? Bernanke apparently doesn't see many positive advancements in the near term, not even mentioning the upcoming Bitcoin halving expected in April that many other market onlookers are hoping will buoy Bitcoin. Quote, new product innovations are close, but not quite there yet. Things still feel insular, Bernanke wrote, adding that precarious macroeconomic factors will likely continue to press on Bitcoin. It's hard to say exactly what will happen, but it's also difficult to see many long-term headwinds working against Bitcoin. In terms of regulation, it seems like the worst of it is behind the industry now that Binance settled charges with the Department of Justice and the FTX saga is wrapped up. And if it's true that continuing outflows from GBTC are primarily the cause of the recent market dip, that's likely to wrap up eventually too. FTX, for instance, has already sold off all of its GBTC. Many others participated in the so-called Widowmaker trade, which involved trading BTC for GBTC and profiting when GBTC was at a premium and losing big when it fell to a discount. But JP Morgan said GBTC profit taking is likely over. But to put recent downward price movements into context, Bitcoin fell nearly 30% the day the SEC rejected the first Bitcoin ETF application submitted by Cameron and Tyler Winklevoss in 2013. Then there's the bull market beginning in 2017, a year which began the People's Bank of China deciding to ban crypto and restricting what were then the big three exchanges, Huobi, OKCoin, and BTCC. So it goes on to say that all of this is to say that Bitcoin has always had its ups and downs. Bitcoin ETFs have been a disappointment in terms of immediately fomenting another rally, but are still a symbol for the long-term viability of the asset class. The first few weeks of trading have seen record-busting volumes, and as Deutsche's survey found, the majority of ETF flows have come from retail investors, indicating it is a tool that could further this adoption. As Bernanke said, quote, as always, patience is your friend. And obviously, patience through this bear market is everybody's friend. The hard part, of course, is always coming up with the capital to start rebuilding. Luckily, what I have noticed, at least in my own business practices, is that I'm capable of now rebuilding. Yes, I have to take some outside income, and I do have to work a day job and that sort of thing to get by, but that also just compounds the fact of being able to invest harder into equipment and that sort of thing. So let me know what you guys are thinking about this. I still think nothing trumps the Bitcoin halving cycle as it stands right now until we see something that really drives fees up. And guess what? ETFs do not drive fees up, and that is a fact because it just doesn't transact on the blockchain in the same way other transactions do. So if we really want to see something that influences the price of Bitcoin, it's going to be technologies that drive the fees up on Bitcoin, meaning that people need to start using the damn shit before it'll actually influence the price of Bitcoin to level out as a whole. And that's just the way it plays out. We saw this with Ethereum. With Ethereum, right, the big driving factor of Ethereum miners being so profitable to the point to where almost the cost of power didn't matter was the fact that everybody and their mom was buying NFTs and trading on DeFi platforms. And when it comes to that, if you're looking for projects to mine in the future and what might be hefty, you want to see what these projects are doing and if they're going to influence people to drive those fees higher and higher so that basically you have a higher mining income. And that is really kind of what I look at when we discuss these things. Thanks for watching this clip from the Crypto Mining Show. You can check out the full episode here, and don't forget to subscribe down here as well. You can also check out my crypto mining e-course at sonofatech.com, where you can get a free month of supporter status with a purchase at sonofatech.locals.com. Also, don't forget to check out my merch underneath the video or at shop.sonofatech.com. I'll see you next Tuesday.